Losing is part of trading. Stay tuned, traders. We'll be right back. Good day, traders. Stacey Burke from Stacey Burke Trading. Friday night in Perth. Non-farm payrolls coming out in about 2 hours. And just going through some emails. And one of the questions we had was about non-farm payrolls. And I think, I don't trade the announcements per se. I stick to my hourly charts and my levels on those charts with my daily levels. But one of the things that we discussed in that exchange of emails was that you have to be willing to take losses. So losses are part of trading. And one of the things that I took a long time to learn was that, in order to succeed long-term at trading, you have to get really good at taking losses. And those losses, as I learned more about not only just taking the loss, but making my losses consistent, keeping my losses at 1R or 1 bar, 1R. When I refer to 1R, that could be a percentage of capital or a certain amount of dollar size in terms of trading size, or just purely a technical stop level. But in order to succeed long-term at trading, you have to get good really at two things. Becoming a really good loser, so becoming an expert at losing. As long as you have an edge and you can execute your trading plan effectively, consistently, and duplicate that, then the second component of that is getting good at holding on to your winning trades as long as possible. So squeezing the maximum amount out of your winners and then losing as little as possible on your losing trades. And one of the ways that I try to do that is I go down to smaller time frames, which I know invalidate my hypothesis for entering the trade in the first place. Usually my trades are momentum based, so they should take off, and I've basically measured the stretch factor on all my winning trades, and for the most part it's very seldom more than 5 or 6 pips of heat maximum against my position once I'm in the market. So if it starts to creep around 8, 9, 10 pips and my stop's 12 or 13, I may just cover that trade. Now sometimes that doesn't work out as well, and there are certain situations where I just will leave my stop, put my target in, and leave the screen and come back an hour later. So I'll wait for the close of that hour to take place, or I'll set an alert in place so that once the market has moved 1R of my entry candle on the 1 hour level, I'll move the stop to break even. That's just what I've found in my own testing and my own trading. And again, with payrolls, I don't trade that per se, but I will look at my hourly charts in the last hour close prior to the announcement. And if there's anything that resembles a trade setup, I will go down to my 5-minute charts. And often what you'll see on some of the payrolls trades is that it will vacuum into a level before it effectively takes off with a 1 bar stop. Now the markets have been pushing up into extremes in some of the major pairs, and so I wouldn't be surprised if the market actually runs one end or the highs or lows of that market and then actually proceeds to move towards the other side of the trade or the other side of the range for the week at least. So non-farm payrolls is just something, again, I don't like to try and trade volatility, that type of volatility, unless there's certain types of setups that I can identify as a clearly opportunity where I can identify an asymmetrical risk reward, but also predefine my risk and be very clearly cut about that. Because once that market moves in those types of situations, you will often get slippage or gaps between your orders that are entered into the market and what the market actually fills you at. So, but one of the most important things is get really good at losing. If you're afraid there's going to be a gap or some slippage, maybe reduce your position sizing for interest rate announcements or non-farm payrolls, those types of higher volatility type news releases. But generally speaking, get really good at losing. You're going to make mistakes. You're even if you don't make a mistake, you're going to have losing trades. So you're going to have a loss. You're going to have a loss, but then you're going to have a winning trade, and you're going to get 4, 5, 6R on that trade. So that's why it's really critical to get good at losing. Keep your losses consistent. Keep them at 1R, whatever that 1R is for you, either in a technical level stop again, or a percentage of capital, or a dollar amount. Just get really consistent at that and make sure you've got a positive expectancy on your trading system. And stay disciplined, stay focused, keep getting better, traders. If you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. Get in the habit of learning something new every single day. Force yourself to get better. Force yourself to get a little bit bigger. Improve your ability to execute your trading plan flawlessly, and may the markets go with you. Have a great trading week.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.